Have you ever wondered why some investors seem to make all the right moves in real estate, while others struggle to turn a profit? The world of real estate investing is a vast and intriguing landscape, teeming with opportunities for those willing to explore it. As we navigate through the year 2024, the market continues to evolve, offering potential rewards for investors, both seasoned and new. Imagine a vibrant marketplace filled with a myriad of properties. Each one, whether it's a cozy residential home or a sprawling commercial complex, holds untold potential. But much like a treacherous mountain trail, this landscape is riddled with pitfalls that can trip up even the most cautious of investors. Take, for example, the story of a novice investor named Sam. Sam, filled with enthusiasm and armed with a chunk of savings, dove headfirst into the real estate market. He purchased a property that seemed like a steal, only to realize later that it was located in a declining neighborhood with low rental demand. This resulted in a significant loss, a harsh wake-up call that investing in real estate wasn't as simple as buying low and selling high. Now, this tale of Sam is not unique. Many investors, lured by the prospect of quick returns, fall prey to similar mistakes. They underestimate the complexity of the market, ignore crucial factors such as location and rental demand, or overestimate their financial capacity. The real estate market, much like any other investment avenue, is governed by its own set of rules and trends. Understanding these rules, being aware of the trends, and having a well-crafted strategy can mean the difference between success and failure. As we delve deeper into the topic of real estate investing, we'll unpack the most common mistakes that investors make, and most importantly, how to avoid them. We'll hear from industry experts who've navigated this treacherous terrain and emerged successful. To avoid falling into similar traps, it's crucial to understand the most common mistakes in real estate investing. After all, knowledge is power, and in the world of real estate investing, it can be your most valuable asset. We spoke with industry expert John Doe, who has over 20 years of experience in real estate investment. John Doe, a seasoned veteran in the realm of real estate, warns about the common pitfall of misunderstanding the market. It's a mistake that's easy to make, especially for those new to the field. But what does misunderstanding the market actually mean? John explains it as the failure to grasp the nuances of the local and national real estate trends. To navigate the complex world of real estate investing, one must understand that this market is not a monolith. It's a patchwork quilt of local markets, each with its own unique trends, dynamics, and factors influencing property value and demand. So, tip number 1 from John: do your homework, research the local market where you plan to invest. Get to know the area's demographics, economic indicators, and future development plans. John also emphasizes the importance of keeping an eye on national trends. Real estate, despite its local nature, isn't immune to broader economic factors. Interest rates, housing policies, and even global events can all impact the real estate market. Therefore, staying informed about these larger trends can help you make smarter investment decisions. But how does one conduct this market research? John suggests various resources. Local real estate agents, city planning offices, and even online real estate platforms can provide valuable data. Additionally, attending local real estate investor meetings, and networking events can offer insights that you won't find in reports or articles. John also advises not to overlook the human element of real estate. Talk to locals. Understand their needs and concerns. After all, these are the people who will be your potential tenants or buyers. Their perspectives can give you a clearer picture of the market than any spreadsheet or graph. As John highlighted, understanding the market is the first step to successful real estate investing. So, before you dive headfirst into your next investment, take a moment to understand the market you're stepping into. It might just save you from a costly mistake. Next, we have Jane Smith, a successful real estate investor and author of Smart Investing. Jane, drawing from her wealth of experience, brings to our attention the financial pitfalls that investors often fall into. One of the biggest mistakes, Jane points out, is over-leveraging. Investors, she explains, often get carried away with the allure of leveraging to maximize their returns. However, while leverage can magnify profits, it can equally magnify losses. Smart Investing, Jane's book, advocates for a balanced approach. It's about knowing your limits, understanding your risk tolerance, and not overextending yourself. Jane also highlights the common error of underestimating expenses. Real estate investing isn't just about the purchase price, she cautions. There are ongoing costs to consider, like maintenance, property taxes, and insurance. These costs can add up and erode your profits if you're not careful. So, Jane recommends doing a thorough cost analysis before making an investment decision. And then there's the unexpected. The unforeseen can and will happen, Jane warns. An unexpected repair, a sudden market downturn, or a prolonged vacancy period can throw a wrench into your plans. To protect yourself, Jane advises having a contingency plan in place. This might mean setting aside a cash reserve or having an exit strategy. Practical and pragmatic, Jane's tips are all about managing finances wisely. She encourages investors to take a holistic view of their finances, consider all potential costs, and prepare for the unexpected. This way, she says, you can navigate the ups and downs of real estate investing with more confidence and resilience. Jane's insights remind us that sound financial management is crucial in real estate investing. It's not just about making money, but also about managing risks and protecting your investment. So, heed Jane's advice, be mindful of your financial decisions, and let them guide you towards successful real estate investing. Our third expert, Tom Brown, specializes in property management and investment consulting. Meet Tom Brown. With a career spanning over 2 decades in property management and investment consulting, he's seen his fair share of real estate ups and downs. One of the most common mistakes he's encountered? Neglecting due diligence. Tom begins, I can't stress enough the importance of due diligence. It's surprising how often novice investors overlook this crucial step. They get swept up in the excitement of purchasing a property and fail to dig deeper. But trust me, due diligence can save you from a world of trouble down the line. He goes on to explain the key components of due diligence. Property inspection is your first line of defense. You need to know the condition of the property you're investing in. Is it structurally sound? Are there any hidden issues that might require costly repairs? Thus are questions a good property inspection can answer. But it's not just about the physical condition of the property. Tom points out, legal checks are equally important. Are all the property's permits and licenses up to date? Are there any pending lawsuits or disputes tied to the property? You need to understand what you're getting into. And then there's the issue of growth potential. Understanding the property's potential for growth is what separates a good investment from a great one. Tom explains, you need to assess the neighborhood, the local market trends, the potential for rent increases. These are factors that can significantly impact your return on investment. He concludes neglecting due diligence can lead to costly mistakes. It's like driving blindfolded. You might get lucky and reach your destination unscathed, but more often than not, you'll end up in a ditch. Tom's advice underlines the importance of thorough due diligence in property investment. Remember, in the game of real estate investing, knowledge is power. The more you know about a property before you invest, the better your chances of success. By now, it's clear that successful real estate investing requires more than just buying a property and hoping for the best. It's a game of strategy, insight, and above all, knowledge. Let's recap the wisdom our experts shared today. From our first interview, we learned that understanding the market is crucial. Real estate isn't a one-size-fits-all venture. Each market has its unique dynamics. Whether it's urban or rural, high-end or budget, every market has its own set of rules. So, before diving in, do your homework. Understand the demand, the competition, and the potential returns. Our second conversation highlighted the importance of managing finances wisely. Real estate investing isn't just about having deep pockets. It's about making smart financial decisions. Over-leveraging can lead to financial ruin, while under-budgeting can leave you stranded mid-project. So, plan your finances meticulously. Consider all costs, including those that aren't immediately visible, like maintenance and vacancy rates, and always have a safety net. The third expert underscored the importance of due diligence. Real estate investments can seem shiny on the surface, but hide pitfalls underneath. So, before committing, thoroughly inspect the property, check for hidden damages, potential legal issues, and evaluate the neighborhood. It's better to spend time up front than to face surprises down the line. But these are just a few pieces of the puzzle. Real estate investing is an ever-evolving field. Trends change, markets fluctuate, and new opportunities emerge. So, keep learning, keep growing, and stay adaptable. And remember, every mistake is a learning opportunity. Avoid these common mistakes, and you're on your way to a successful real estate investing journey. Remember, knowledge is the key to profit in real estate investing. And with that, let's wrap up today's discussion. Keep these points in mind, and you'll be well on your way to becoming a savvy real estate investor. We hope this video has given you valuable insights into the world of real estate investing. The journey doesn't stop here, though. To stay ahead of the curve in this dynamic landscape, it's crucial to keep learning and refining your strategies. As they say, knowledge is power, and in this case, it could be the key to your next successful investment. To ensure you don't miss out on future content, consider subscribing to this channel. We'll be bringing you more tips, insights, and expert advice, all tailored to help you navigate the real estate market with confidence and skill. We also invite you to join the conversation. Whether you've just closed your first deal or are still in the research phase, your experiences and questions are valuable. Feel free to share them in the comments section below. Stay tuned for more expert advice on real estate investing. Until next time, keep learning and investing wisely.